Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord community? Thank you, Marty. I've got a number of announcements for you that you might find interesting. Um, and just so those of you who know, if you're visiting for the first time, this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis for structured trades that you can develop in the Bookmap Discord Trader Lab community. There is a link in the bottom of YouTube if you're interested in a professionally based community that it's all about the business of trading, developing trade plans, operating in a random environment with statistical probabilities that favor you. And of course, you have to do the work and find the time frame, if you will, that you want to align with. The business of trading is really much a statistically based business. The outcome of any interaction with the other participants is random. We're in a gaming business. We have a proven model. One moment. Little audio thing going on here. Thanks, Plato. So there's the Trader Lab is really gaming in the sense of trading, I should say, is a gaming process. It operates the same way casinos do in the sense of how they only play games that have anchored inputs, not variable inputs. And I think the real catch for us as traders, as we develop, is using a smorgasbord of indicators, throw them together, and think that more indicators create more certainty. And actually, in my opinion, they do the exact opposite. Casinos do not use random inputs. They use something called an anchored input. And put it this way, randomness in a random environment, old saying in early computer days, garbage in, garbage out. You cannot develop an edge with random inputs. So anchored inputs, and the way games operate, if you will, in the casinos, which is a proven business model, is anchored inputs. They don't change the games. They do pay the gamblers, and they give them the cocktails and the ticket to the buffet. So think about it. And they're profitable with that process. So since we have a proven business model, what we really need to do as developing traders is understand the business that we're actually operating in and not try to bend the business into something that it isn't. It is not predictable. We cannot squeeze the risk out. We cannot create certainty. Now, I understand you may be wanting that, but that want, that need, is not have anything to do with the business. It has to do with your primal wiring to avoid risk. Now, and we all have winning trades. So, the grand illusion, in my opinion, is the business model and trying to make it something it isn't. Now, of course, since we have winning trades, we're going to, quote, believe that we just have to make it better. Maybe a few more indicators, a little more tuning, a little tweaking, right? In fact, I forgot to do something here that I got to take care of, so excuse me one moment. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but of course, if we get into real time scenario here, we'll discuss it. This is really built on structured trades that are available to everyone in the Bookmap Discord Trader Lab community. There's a library of webinars, a document section, and much more. Now, if you've missed out on this, I don't know what you're waiting for. You can even borrow the neighbor's cat if you can deal with that, and take a picture, take a photo of your favorite chameleon, python, whatever it is you have. I think there's one trader has a pet cricket. Or no, it was a praying mantis. Nice pet. Take a shot. with Bookmap in the background. And if you don't have Bookmap, there is a free digital version you can download so you can kind of play around with it a little bit, get a sense for some of the things it might do, and take a shot. Use the hashtag BookmapPeps, drop it on Instagram, X, or LinkedIn, and you're in for a month of Global Plus if you win. I think that's pretty cool. That's just me, but hey, as my mother used to say, free is good. Now, there's another thing I have to tell you about, of course. This week, in the special events section, the Academy coaches are doing pro trader webinars. So and it's a great lineup. I know these guys, and to become a coach in the Bookmap Academy, you have to, so we say, earn your stripes. So you be able to get different viewpoints or different approaches. And I think as traders, there's always information out there. But some of the things you'll see you might relate to, and other things you may not. So we're always looking to educate ourselves. But I always have to say, no matter what you see, you always have to vet it. And speaking of vetting, Bruce Pringle, who's our chief educator, has something that is brand new, and it's kind of been flying under the radar, and I have to tell you about it. It's called Bruce's Pilot Program. It is focused on extracting edge. Now, what Bruce will do is help you understand a little bit more on the extraction process, how you can develop edge. And I think for all of us as developing traders, the biggest challenge is what's noise, what's edge? How do you create edge? Now, I do focus on this in Trader Lab, and we do a lot of work because that's really the basis of the business. Now, that's a special program, and you would need to register for it. You can find that, of course, in the Bookmap server. And you can I suggest, if you haven't looked into this, that you, what are you waiting for? Oh, what's this? Thursday. Now, let's take a look at what's going on here. This is what's called a microcomposite volume profile. All it does is it looks at volume, combinations of volume, and wherever the market overlaps, these are auctions. This is the FOMC, and this is what I called an inventory grab. The reason is there are sell stops under here, and we got down to it, but the buyers came for it, and it leaves a buying tail. A buying tail is an aggressive scenario. So now let's go a little further. So here's our buying tail. We open and we test 70. What is 70? If you look at these are called distributions. And all it is what's too high. It's shopping. Remember, trading is shopping. It's not hocus pocus and some mysterious thing. We make it complicated because we think somehow in the complexity we're going to find with nobody else who's been doing this since technical indicators came out of the closet back in must have been late 1970s. I started in 1980. We were all pretty excited about Wells Wilder and RSI. And before we had Bollinger Bands. So anyway, but we did have trend lines, moving averages, and classical bar charting. So what is this? I'm not paying that. Too high. And what's down here? Too low. What's the retail price here? 97. Let's go a little further. Now we find this is in this distribution, too high, too low, too high, too low, retail, FOMC. Now again, this is Thursday. Open, what do we test? Too low. High volume is a retail price. Now you get it. You go to the store, this is shopping, but the prices don't change. Here we're in a dynamic real-time auction. They're changing constantly. Opposite end of the spectrum, but the process is the same. If 70 becomes too low and we close up here, new retail price is 97, then what's the outside where the low volume is down here? 87.75. Let's look a little further. So now we have the 87.75. Now this is Friday. 97 is the retail price from Thursday, sorry. And where was our support? 87.75. Our 70 was tested too low, retail. You can't buy it here anymore, Tom. So now we have this low volume price, 87.75. The low of the day on Friday, coincidentally, in quotation marks, and it is, because it's always random, except the auction said maybe, and I always say maybe because that's the best you got, this is too low. Let's test it. Too low. Then what? Hasta la vista. Thanks for playing. We'll see you later. And what is this setup? Now I'm going to explain a little bit more. It sets up the possibilities to go higher. I know you're going to say, or rotate in here, and then, but the trend is up in the higher time frame. So we have 67.22 as the retail price. Now let's go just a little bit further. I want to show you, this is that high volume node, okay? That 87, that's the low of the day on Friday. Who knew? Now this, where this is here, this red line is the first hour's high and low. It's called the initial balance, and it's very important. So what happened was the RTH open was there. So we go up, we come down. So the market often goes up to go down, goes down to go up. Now, initially, I was looking for it to go up. All right. Well, what did it do? It ended up going down first. So that was like, oh, that's nice. So eventually, got long down here, and this is we talk about this in the stream from Friday, and then the 97, wherever that was, here, this high volume or retail price from Thursday was the first scale, and then since we're in a higher time frame up move out the top, and then whatever is whatever, right? And then this is called a neutral extreme day. Now neutral means, and this is market profilage. We took out the first hour's low, and then we took out the first hour's high. It's neutral. Now, the way this might work is uptrend. Market is long from this day, right? This is the outside edge. Who knows? We know it's the outside edge, but we don't know if the market will get there, how, what. This is the beauty and the nemesis for us day traders is we can't predict. Our job is to attempt to align. So when we first come out here, and this was not on my radar initially. Once it was on my radar, then my objective was to get long. But then the question becomes, where do you get long? Well, this is my outside edge. So I think it was about 89 where my entry was over here, and then it was just to come across and keep going. This is called a low volume zone, and what it is the market got urgent in here. These are called singles. I'm not going to spend much time on it. And the retail price from Friday is 21.22, depending on when you measure the close. In other words, session. Now this is the ETH, and I was looking at this, and the overnight volume point of control, or the highest volume from the last auction, the ETH was 02. And the high volume from Friday was around 21. So I had 21 as resistance, ETH high, 02 as my fair price. And when I came in this morning, I looked at this and I said, well, we might have found too high, ETH high, and this is the retail price. So depending where I open, I'm going to trade towards this. So that was my first trade, was to do what? Take a short. And I'm going to show you how that worked out. Let me just make sure I got everything squared away here. Nope, maybe not so much. Okay, so ETH low, overnight volume point of control. And let me give you we opened lower inside of yesterday's range. The reason I was going, and I'm just going to give you some ideas, 80% probability to get here. Getting to the ETH high or low is 97% probability. Taking out the first hour's high or low, about a 98% probability. Getting to the ETH low, about a 69% probability. Getting to the previous point of control, a 68% probability. Now, this is the ETH high. This is the previous point of control, high probability. Getting to the overnight volume point of control, 82%. So when we first were in the open, now when you open in range and we opened in value, we suspect the potential for what's called two-sided trade. So that set me up with the idea that I may get some buyers and then rotate to take out the opening swing low and then go here. So this was my first trade, was a short, and this was my primary target. So I'm going to show you the trade. Trade didn't work, but that's okay. It's trading, right? So right here, I'm seeing a sweep. Now, this is not RTH open yet. So I'm looking at this and I'm saying, well, okay, I got a sweep here. Now I have a sell sweep. So I'm looking for the up rotation coming into the RTH open. There it is. And then I have overnight mid. And the overnight mid, just as an example, has about an 81% probability. So I'm kind of looking up here with the idea coming down there. So this is my first trade as a short. I took a stop on it, which is fine. But let me show you. Now, I hope you don't come to Trader Lab thinking that nobody takes stops in this business. Just the way it goes, So, and here's the other part. Part of the idea of opening this kind of open in this condition is rotational. So it's called an open auction. An open auction is where you're going to get both sides interacting. So the anticipation is we're going to abuse both sides. So if the market goes up first, we're looking for it to come down and take the opening swing low, and then probabilities. So that's why I was looking for the short. So, and that's a trade I take very often, and for me, it has a good probability, but nothing's guaranteed, right? So let's look now. Let's get into this. RTH open. So the first move is up. So right here is going to be my opening swing low. Right here. I'm going to mark it. So when I'm looking at the short, and here's why. I'm going to give you some logic here. Buyers are here. There's a test. This is called VPOC migration. Under a different open, I'd be looking at a long here. It doesn't qualify for me. I'm just telling you me. I'm not saying it doesn't qualify for other traders in Trader Lab. It's just the way I do my thing, and it doesn't matter. There's not a right in trading. There's only something that has statistical probabilities. In this configuration, I do not trade something called VPOC migration at this point. I trade the plan for open auction, which is two-sided. So right here are the buyers. So the buyers are here. So I know there's stops there under the swings, and I have stops there under the variable high volume node, which is here. So I look at these yellow lines, variable high volume nodes, like support and resistance. Now, why would I even think that? It's volume. Well, let's go back to the concept of shopping. If the price of whatever the product is, S&P, this is the fair price. Now, there's no volume when it opens, so this is a very aggressive process and very confusing for developing traders. Remember, it is not mechanical. If the price shifts here, then potentially this is too low. That's my support. So now the market's going up. So I'm watching the liquidity. I'm not seeing anything under, I should say, on top. I'm watching this, and it's above, and it's getting eaten up. I want to see liquidity underneath if we're going higher, and if we flip underneath, I'm going to be taking my short to take out the opening swing low, and then and that would be my scale to get the stops, and then here. So that was the first trade. Let me show it to you. So right here, I'm looking right in here. So right here, I'm looking at my short, but it's really kind of conflicted, you know. So I'm looking at this, but I don't see much here. I'm seeing this liquidity. That's a bit disturbing. Okay. So I still want to see the liquidity. Now I'm getting the liquidity tightening up here. So that's getting me very interested in this. So in here, because now I'm seeing this above, you notice what's happening here. The liquidity's here, but we're taking it. Now this is support. This is just another way to use order flow. It's just something, and you have to vet it. The liquidity's here. I take it out. This acts as my support. Break low, mid VWAP, and now we come up. So at this point, you know, mid VWAP, that still says going up to me. This comes in here. Now, just like it did there. So what about it? If I come above it, break low, now what? Do I come above it? Now I get VPOC migration. Now this, what I'm sharing with you here, is not where developing traders ought to trade until it's vetted. The open is a different plan. It's not plug and play. It is a specific scenario. Now, notice the liquidity. I break below the retail price. Now let's talk support and resistance in a kind of not the way most of you probably think of it. Too low, retail, test, too low, move away, mid VWAP. This is mechanical buying by retail traders. Lovely. New retail price. What can it do? Up, down, right? Well, this is a change in behavior. So here is where my short is. I am going for the opening swing low and this. So that's the first trade, okay? And the joy of joys is I didn't get it because I had it under here. Now I saw this and I thought about, well, you know, you could put it a little ahead, but I'm pretty confident in this trade structure, the way I trade it. So anyway, I paid the price. You know, but it's my plan. So I just, because at least I was looking for the stops and that for the buyers that were here. So you know the concept. These buyers, that if we took stops, which would be inventory, they would take the other side. So my confidence in this trade design was to do that. Didn't do it. So then I'm going, well, I've got this. And I've got this. So maybe we'll come back here and then continue. So that trade, as we say, went to the happy hunting ground. Now, here's where the long setup. So this is a variable high volume node. So the way I kind of pull this thing apart is to think of it in pieces. So let me show you. So if we want to look at this, this is where the lowest retail price is, and here. So there's two of these. Okay, so there and there. So I look at this like resistance. See the behavior? So I have this too high, break low, resistance. See, this sets your short up here. So these are, for me, shorts in my plan. Not saying it's a good plan, it's just the one I use. And then I have support here, here, and then, of course, my opening swing low. And as they say, thanks for playing, we'll send you a coupon to the buffet. And here's my resistance. Look at the concept. Resistance, resistance, resistance. This is resistance. So here, miss the opening swing low, teeth chatter, resistance. Come down here. I get a sweep, and this is now support. So right here, out, turned around, did not get a great entry because I was late. Because I guess you might say hope is springs eternal. So the trade hadn't failed for me holding this. The sweep and holding this, though, support. So I have support here because my buyers were here, and there's my liquidity. This is the reversal here. Support is there, and resistance is there. This right here was the out of dodge, and now the long. And I didn't get a very good entry on it because I was working the short. So then north. And then, so all the shorts are off the table. And I posted in the Trader Lab, I said, what's the tell? You know how somebody's eye twitches or something. Well, what about the market? What did the market tell us? The market, if the buyers were aggressive here, there's your icebergs, and we couldn't get the easy, because it's easy for the market just to get some stops. So that tells us the buyers were aggressive. The passive side was aggressive here, and they were taking the other side of these stops right here. So didn't get there. So that changes the whole thing. So anyway, long, and then it's what's above us. This. And what is this? The naked volume point of control. This is where statistics come in, and you have to bet everything for yourself. It is 68% probability. What about taking out yesterday's high or low? Well, considering there's an 87% probability of taking out previous high and low, and remember what we hit on Friday, the outside edge, which was here. So we did not look at what we did. We have to always think about if this, then that. If not, then what? If we don't take out the opening swing low, so if this, that. If not, then what? That. If we don't take out the opening swing low, and one never knows if we will, won't, or otherwise, then that. If not, then what? North. If we have a 87% probability-ish of taking out the previous high and low, and this was a key outside level from Thursday, a target, then what's the previous high? All I was doing on my short was just trying to pick off the weak longs to get position for longs from down here. So my plan was short in the morning, early, pick these guys off the opening swing low, get here, see what the behavior is, turn around if this is too low and get long. So it's just didn't. I just want you to know the thinking. Now thinking and what happens is something else. But now just longs. Now here is the next target, ETH high, and then we have yesterday's high, Friday's high, which is the all-time high, was up here. So that's where we're headed. That was the target. And then 1.5 IB. Once you get over Friday's high, the all-time high, you've got nothing but, as they say, thin air. So the next target, and I'm going to tell you what I did up here. Because once you get into new territory, all-time high, there's nothing really to reference. So I had two locations up here to work with. I'm going to show you what they are. And so did some other traders in Trader Lab. Good job. 1.5 IB. So the IB is the first hour high or low. This is the IB high. And by the way, we have structured trades for this also, which we'll talk about. Target was here. So coming out here, which is this here will be 9:30 Central Time, first hour. And there's over 90% probability to take out the first hour high or low. Go north by northwest, we're looking at this. We're looking at this, 87%-ish probability. 97% probability to take out the ETH high, 67% probability there. this 87%, and then clueless. 1.5 the IB high. Let me give you a little statistic on that. It's only at 40%. But what is the higher time frame? North. Now there was one more target in here, which I don't see sitting here. What was it? 40. So, yeah, there it is. This came in at 40. Here, let me see if you can see it. This. So I had this as a target, and then I saw this, and I said, what the heck? And I had this. So I was managing the trade up in here. So we didn't get there. We haven't gotten there yet. So now I want to show you another trade here. So we have something called the IB continuation trade. It's a structured trade. You can learn this. In fact, I'm just observing we're in mean reversion right now. I'm going to try to get to that. So this is a continuation trade. It's a structured trade. You can learn this in Trader Lab. Now, all these trades have qualifications. It isn't just plug and play. Most of us, as we're developing as traders, we see something, we plug it in, and we think, move the ATM in the basement. It doesn't work that way. Because if it did, all the retail traders who do that, which is what most of them do, it's not their fault. It's just they don't know. They don't know any better. And why do you get a software toolbox that has 200 indicators in it? What does that say about all the indicators in there? You know, throw them all together. What? They all have winning trades. If you had a random buy-sell button, you'd have a winning trade too. So what does that do for you? I'm going to say not much, my opinion. So what do we know? This right here is the first hour's high. The IB continue, and we have an 87% stat open. You see how you might use this? So if I'm coming up, and we did not, remember what did not happen. If this, then that. If we don't take out the opening swing low and get to the overnight VPOC, then what? What? Go north. How do we get on? Well, structured trades. Where's our structured trade? Right here. 9:30. The first hour's high, right here, is our first hour is the IB. 98% probability we're going to take it out. There it is. That's our extension. Buyers are, as they say, firmly in control. 87% probability sitting up here. How do I get into this thing? Right here. This is the IB continuation. So the market pulls back. Now let's look at our microstructure. So this is about alignment. And we have currently mean reversion trades in play, not a recommendation. We'll talk when I get to it. So in here, here's what you're seeing here. Sellers are there. The buyers were here. Let's put a little something around this for now. Let's just look at some of the structure. So this is a combination of order flow, liquidity, and now we're in order flow with structured trades. So here we have our sellers are there, our buyers are here. How do we know? Sellers are there. Why didn't the market go down? Because you got icebergs absorbing here. Sellers are there. Why isn't the market going down? You've got buyers there. Why did the market rotate here? You got sellers here, but your buyers are here. Break high, IB, trigger, structured trade. Sellers are here, but they're being eaten up. Think Pac-Man. Buyers, 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 rotation. Where were my buyers? They were there, and the sellers were there, and they got run over. If these buyers here wanted it, think the logic. Think about this. If you're in the store, you're a buyer, you're a shopper, and you think an S&P at this price is a heck of a deal, and the price starts going up, and if you find something on the back shelf that they didn't raise the price on, would you buy it if you're a buyer? There's the test. Break high. These sellers were absorbed. There's the test. IB. This is called the IB continuation trade. You have to vet these. There's nothing mechanical. Oh, joy. And now this is where attempting to go for the statistical probability. So you get risk neutral. This is your trade. Now, possibilities. 1.5 IB. And this. And the 40. Okay? So that was the IB continuation trade. VPOC migration. This is another structured trade. This sets up something called mean reversion. Underscoring the word mean. What is mean reversion? If we're in a directional market and you see these consolidations, and that's what this is, this volume is a consolidation. It's no different than that outside edge, 87.75. Out here is an outside edge, except this is in a developing time frame. Everything works the same way in the auction. It is not mechanical. It is time frame specific. So if we come outside to that low volume node out here, this is a long continuation trade. It is called mean reversion. Mean reversion. Let's look at the trigger. This is the outside edge. Remember what we did in that higher time frame. Outside, back to the high volume. Outside, back to the high volume. What did we do in that other time frame? Let me just show you again. Outside, that was the high volume, and then across. This is now the high volume, and we're above this, okay? So outside, in. What are we doing here? Outside, in. So this is, and there's your sweep. So I have this sweep, which suggests counter rotation. And now you have liquidity. And where's the last location where, so this is your outside. So we had the IB continuation trade. You'd have the primary targets. Now you would come out, if this is your plan, and you'd be looking for longs. Let's take a look. Sweep. And what's tricky about mean reversion is you're stepping in front of a bit of a train, because where is the outside edge? So this requires skill, patience, and discipline. You see this right here? So we come down here. Now, so I'm looking for the up move. This tells me potential rotation coming. Don't know where. There's my liquidity going lower, 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 more here. And now I'm going to show you microstructure. This requires, of course, an understanding of market mechanics and recognizing structure. And if this is not your thing, it's not your thing. But the most common behavior we see in the market is rotations, right? So if I know the high price is here, or retail price, I mean, so this is where the highest volume is for the day. If that's the highest volume and it goes on sale, remember, retail, this is the fair price. Well, if I come out, they lower the price because of a rotation, and now I have structure, and my buyers are here. Now my buyers are here, and I need a trigger. You have to isolate triggering structures. As far as I know, see the sellers? Sellers are there, going to zero. Why not? I don't know where the outside edge is. It's in this area, okay? That's what I know. Don't know anything else. What happens here? I get my buyers. If I see my buyers, then I've got to be looking out here where the volume is. This. So the volume is there. Now this is micro, so it's I'm not paying that. Yeah, but it's on sale. No clue. It has to break high. Sellers are here. Buyers are here. No clue. Break high. Okay, trigger. Now, and I'm out here. Now, this is tricky. Mean reversion. It could come out and hit you and come right back. This is the mean. So wherever you get into this thing, and you have to be very disciplined, you're trying to at least come here and then test the new high of the day. And wherever it goes, it goes. So this is the entry. It's here. And you got to be thinking about scaling here or there. Right there. Variable high volume node. I got to label it. Why is this level important? Let's look at the language. The reason it's important, and you would scale there, or, it's up to you naturally. I would scale there. And I'm not on this trade. I don't usually initiate trades when I'm streaming. It's because that was too high, right? So if see the resistance, and now we come into an outside edge. This is the reversion trade. So the reversion is to come here and there because we are in an uptrend and we have a new all-time high. Are you thinking of getting short? Well, me, not so much. So this is the last long. This is resistance, and now it's trade management. And let's go back to that 40. It's still there. Yeah, it's still sitting up in here. 200. Let's see if there's anything else above us here that's worth thinking about at the moment. No. So, not a recommendation, but this is the next target. This was the target from the first time around. So, anyway, that's the last long in Trader Lab, and now it's trade management and whatever else, your plan, not mine. And you guys have questions. Hope we're doing okay. How we doing in YouTube? You guys conscious? I know, it's Monday. Everybody's unconscious. Is it safe to say that Bookmap is really useful for short-term traders and not much for longer term because the high liquidity areas are always short-term on heat map? No, it's not. It's how it's an alignment pool. So the way I look at it is, hold on. So it looks like a new high date. Anyway, 40 is the next target on this, not a recommendation. Bookmap can be used any way you want. The basis of everything else must be in place so you understand how the market works. There are some traders that are very short-term oriented, use this for scalping. I don't, and I would say most traders in Trader Lab don't. You kind of pick your rotation, but everything has to be overlaid on the condition of the market. I mean, the fact there's a rotation here, in my opinion, is not tradable. I mean, I would never sell this. I only have longs because the trend is up. But if I'm a higher time frame trader, and that's something that's, what do we call higher time frame? Position trading, trading ETFs. What are we trading? What product? If we're trading futures, then you'd still be long from Friday's low a day, which was that outside edge in a higher time frame. So everything's been longs since here, Friday. This was the long, and it was 87.75, and in the Trader Lab, many of us got long down around 89, 90, in that area to come all the way across. So that was the trade of the day. If it doesn't come down here, and we hold the 97, then there's no reason other than trading rotations. You could be long from down here. So then on that 87, if you review Friday's stream, you'll see the trade. So if you're trading this time frame, Bookmap set it up for you. You still need an entry tool, you see? So it's a matter of how you put the pieces together, and then execution is execution. That's all I can tell you. For me, I want to execute in the tightest range and risk possible, and I consider this like Matryoshka dolls or a vertical integration of time frames. So everything is really the same as far as how the market works, but the time frame you operate in is that variable. So as a day trader, I operate in this, going for that. And I just take chunks out of the market. And this doesn't have to do anything. This could pull, this could be the Great Wall of China. It could be nothing but just a place to pause, catch your breath. There's nothing up here. The next location potentially, and these are just measured moves, and they are really like, where's that dartboard? Let me throw something at it. Because, it's nothing more than like a Fibonacci extension. I don't use Fibonacci. It's as random as anything else, but when you have nothing else with that, So this is so that's about it, So this is where I'm trying to go, and it's not on the button. Everybody who has a high tier order flow tool, who has Bookmap, knows it's there. And we can see the selling. So now, and this isn't a recommendation, in the microstructure, this little high volume node is my retail price right there. If I put it's a node. So what can happen? The outside edge is here. The buyers are there, the buyers are there, the buyers are there, the buyers are above the sellers here. This is where I'm trying to go. These guys were absorbed. There's the iceberg. This is my outside edge. This is the retail price. That in a fractal is the same as this, the same as that. This is too low. As I go down in time frame, this is too low. Variable high volume node. I move up to the next auction. Too low. Retail price. This is the next target. And then subject to your plan. So the last long was here. I don't know if that works for anybody. It works for me. And that's mean reversion. Now you could be done, or you have a trailing process, which would be under here. So you always, when you trail, you have to be willing to give your MFE back, right? So you could be sitting here with your eyeballs, dropping on the desk, but this is resistance. And there was absorption there. That's why it's sitting there. It's Pac-Man. Can the buyers absorb the sellers? Or on this rotation, do the sellers absorb the buyers? And look at the sell stops up here. I should say buy stops. Who's short? I'd like to meet somebody who's selling this. These are buy stops. These are some of the things that are always a mystery to me. In a day like this, new all-time highs, you'll get traders, and believe me, it's not the pros that are selling the all-time highs. These are the retail traders who don't understand that the market doesn't care about the high. And where is the high? You'll know in hindsight. Trying to pick the high, not a good plan. Who are these sellers? I mean, the all-time high is here, so these guys must be new. That's, in my opinion, is not a recipe for sustainability. That's gambling. That is not how you stay in the business. Notice what happened here. So this trade can be over, right? There's the sellers. There's the absorption. There's the buy stops. Who knows? This is micro high volume structure right there. You see that little node? This is like your volume point of control in this. And it's not a short. Might be for you, me, not so much. I don't try to pick the high of anything. Been there, done that, thought that was what we're supposed to do. Figured out that doesn't work. So I let somebody else have the pleasure. These guys are probably doing these buy stops. All these guys are getting stopped out up here. They're all picking the high. Why would you do that? It'll certainly be clear in hindsight. What's the hurry? So in this little auction, that's the retail price. This is where the buyers were. Sellers are here. this is right here is resistance. Now the market is bullish. Okay. So as far as, and this is too low. So I have potentially too high, and I don't pick the high of anything. This is the last place. It was too low. So you can use these structures subject to your plan as support and resistance. So right now we have resistance here, and our last place is here. This is an auction. This is the high volume or retail price right here. Let me just throw a little box around it. I want you to see it, what it looks like. So you can see this. And I use these boxes so I don't forget. And because it's built on participant behavior, it's not, I have no indicators. My indication is the interaction between the buyers and the sellers. That's as deep as this is. So when I break out here and I have my sellers, and now I know support is here. Why? The market didn't go down. Oh, all right. What about this? Sellers are absorbing here. What about this? It's going, no, it didn't. The buyers are there. Where's my high volume? It's there. Okay, support. Next place is an obstacle, is there. So this is resistance. I can break this down, and subject to my plan, I can be trailing behind these. But I have to clear this. So I can look at this and I can go, well, my sellers are here. My buyers are here. The trend is up. So I have no shorts. I only have trade management, and I can isolate resistance. So I know that's resistance, and it looks like we're going to take it out because we're not rejecting this. So support, clueless. Is everybody tracking? This is Trader Lab. This is what we do. I'm not saying it's for you. I will say it works for other traders, but there's no holy grail. There's no secret sauce. Wish there was, there isn't. How we doing in YouTube? Marg, as far as the bubbles go, it's not, it's just aggressors. And you notice the behavior? You see, the bubbles are delta, and delta is made up of initiators and stops. So market orders, like these guys, I mean, what are they doing? They're market orders. You know, a market order becomes, the stop becomes a market order, so we got the delta. The question, the way I interpret delta is not the color of a bubble. I know it's an aggressor, but there's always a passive participant. And that's icebergs and the rest of it that we can't see. You can see the passive side in the limit order book. That's limit. So they're passive. They're not going, oh, sell market. That would show up as delta. But if it's passive, you don't see them. What you see is either icebergs who have to show you the tip of the iceberg, which is this, and others that are just resting in the book. And we don't see them. We see them in the sense of the reaction of the aggressors and what happens to them. Notice where the support is. So I got my sellers. Why is it going up from here? Buyers. See the iceberg? So the buyers are absorbing the sellers still. So if I'm using this little auction with a high volume right here, it's currently too low. This currently is too high. This is a way to define support and resistance. I have no lines in the sense like most of us draw a little trend line. We used to all do that. Oh, let me move the trend line over here now. What good is that? This has nothing to do with trend lines. This has to do with buyers and sellers. So an order flow tool can help us see the behavior and the interaction between the buyers and sellers. You can't see that on a candle. All you see is a wick and a little body and very shapely little body. And but we can't tell with standard charting what is going on inside price. Order flow shows us what's happening to those prices, how much volume takes place at a specific price. That's what the profile does. And because price is not equal. Retail in your store is high volume. That's not the same price as a price that's on sale and it stays there for 2 minutes. Are they equal? No. So that's why the volume profile gives us another way to see inside price. And then the order flow tool gives us another way to see inside behavior, absorption. So it's adding elements. So this is like a chassis. So I already know, based on structured trades, that when it comes out here, this is called mean reversion, and this is a structured long. If you'd taken this long, which is a structured trade, you could be done with it, right? At the 40, which was a target, or you see, this is where the or comes in. It's all trade plan specific. You're on autopilot. If it doesn't take this out, then, we got this. If it comes down and takes you out, you give up the MFE, and then emotionally you deal with the hindsight 2020 moron who I call Hyde. Hyde is going to say you shoulda if this is the high of the day. I knew it was going to go down. Who knows? How can you know anything in a random environment? But the primal wiring is all about risk avoidance and creating certainty. And in hindsight, everything is certain. But when we operate here with what's called the hard right edge, what is certain? Nothing. More buy stops coming out. Boy, they love to sell the high of the day. What is wrong with these people? That's why they go out of business. Retail trader behavior. This is like looking at amateurs because they don't understand what's going on. The idea of Trader Lab is to try to help traders develop an understanding of how the market works, why it does what it does, and how at times to get in alignment with it. To only trade when your trade shows up. Now, what is your trade? Hopefully it's not picking the high of the day. The idea of a trade plan, so you guys know, how do you know if you have a trade plan? If you ever have to say, what should I do now? Then you don't have a trade plan. What the idea of a trade plan is, everything is laid out, not what the market will do. That's random. Just like in the casinos, the cards are random. How gamblers play the cards is random, totally random. So the casinos bring their game to the table. They're not making it up. They don't know what, it isn't like they're going to say, well, when do I turn the cards over? In blackjack, let's deal 10. I feel like it today. No, they know their game. They bring their game. Well, here in the business of trading, we bring our plan to the market. We don't know what the market will do, but we know what we'll do. We know how we will manage our trade because we're not making it up here or guessing. You can't predict anything. So you need to be predictable. That means you bring your process. And if you have to ask a question, we're always going to question, what is the market going to do? It's random. But what you are going to do cannot be random. If you're not sure what to do, because you've already vetted it and you know over time, not this individual outcome, but over a large sample size of interaction with other participants in a random environment, what your edges and what your probabilities are, then you're gambling. Gamblers don't stay in the business. In fact, that's why the failure rate's so high. Unfortunately, most developing retail traders never understand the business they're trying to solve for. They are looking for certainty. It's because we're wired for that. I understand. And there's many vendors out there who'll be glad to sell you some certainty where it doesn't exist. Any of you ever run into that? I'm going to say trading is the most difficult environment, not because you can't learn the trade, because you don't understand the underpinnings of your fight and flight response, your emotional wiring, All the decisions you make are based on subliminal primal wiring to avoid risk and to bring home the bacon to the cave. So if you're not in a long, you're emotionally and chemically, you're going to be under the influence of these primal behaviors to chase the market. And if you're not in the long, the same voice in your head is going to be saying, it can't go higher. It can't go higher. And because you didn't get any of this, you're subconsciously saying, I got to get something. It can't go higher. Meanwhile, stop. See what I mean? And you're on your way out the door. If that's happening to you, by the way, it's happened to all of us. The thing is, because you have random winners doing it, the lunatic under the hood, who I call Hyde, is going to say, I told you so. You shoulda. Because it's all clear in hindsight. But what happens if you're at new all-time highs? Do you think you have an edge picking the high of any day, let alone new all-time highs? Do you? Fairfax, I don't know who is buying at the top of the market, getting squeezed. Well, I don't know who's getting squeezed. Obviously, there's sellers in here. Those are buy stops. So I can't tell you who they are. I can tell you that until it breaks it, as they say, it ain't broke. So market's going up. Now, at some point, it's going to counter rotate and potentially come here. So this is where it may come at some point. I do not look for the short. For me, I just don't care. And the reason I don't care is over the years, I have donated and thrown more dollars out the window looking for a short in a condition like this. I just be done. I go, okay, well, it's changed and now I don't have a trade. Where would my next trade be? Well, it might be outside somewhere to come back here, a long reversion trade, but I will not pick the high of the day. And the reason is, from time to time, I can pick the high of the day. I have thrown thousands and thousands and thousands and multiple thousands of dollars thinking I knew where the high of anything was. Because we all do that. And we don't stay in business if we keep doing it. So I don't have to, see, for me, I don't need to take another trade. I can just sit here and wait. My last trade that I wasn't able to take is this. So this is a long. So how many trades do you need? So far today, there's been a couple of trades. I don't know. I'm okay with that. I can live with that. You know? This is also a Trigger Lab continuation trade. It's another conversation for another day, but that's also in the Trigger Lab. And Trader Lab is a community of like-minded traders who've come together to leverage their collective experience. Data mining is going on, and it's really about the business of trading. It's about, well, what is this thing we're trying to do? Is it a glorified video game? Is that what we think it is? Is it that we think we can trade every rotation and we're just going to have printing press in the basement? What is this? I'm going to suggest it's none of those. What it really is taking intelligent risk and only trading when you have an edge. Casinos do it. It works for them. We don't have to reinvent the wheel. We already got the track. All we need is to figure out the games. And I call them structured trades because it's based on structure. These are structured trades. This is structured trade. Structure. It's all the same. Can you guys see what is going on here? So if this is too low, buyers are there. The red bubbles, the delta, it is absorbed. The sellers are there. If I break above the sellers, tell me if this doesn't look familiar to you. What is this? Is this a potential continuation? If it's vetted, I'm not saying it is. I'm asking you if it might be. Is the process generic? What is over here? Here, let's look at this. These aren't recommendations. This is I'm just showing you things you can think about. Let's look. Chop, chop, chop. Sellers, buyers, break high. Test, potential long, resistance, support, resistance, support, resistance, break high, support, microstructure. Now we have this liquidity. We have to see the reaction up here. Okay, so our sellers are there. More buy stops going off. Please, who is selling this? Stop it. Why are you doing that? This is disturbing to me. These guys are going to put themselves out of the business. Why are they selling new all-time highs? Anybody? What do you think? Why would they do that? Now, this is 2 times the IB. This would be the next measured move is right here. So if you're taking any of these, that would definitely be, other than getting risk neutral, which is part of your plan, if it is, this is the next target. And it's not added, it'd be like right in here. So this is either going to counter rotate, or if we get through it, we keep going. That's it. Ben, is there, well, Ben is asking me if all these targets get hit, is there nothing above? Well, then it's trailing stops, Ben. And if you have vetted ways to enter. When you're in this kind of configuration, we are in something that's pretty much trendy and new all-time highs. So I would say the buyers are rather rabid about this thing at the moment. And we don't know where the high is going to be. So there's none of that. There's none of that doesn't exist, you know. So 50 is a nice little number, nice round number, and we got resting liquidity sitting up there. This is where we've got to kind of watch. And all it is take pieces. I don't know where it's going. I don't think about it, really. I mean, I'm seeing my sellers, but my buyers are still absorbing them. Buyers are here, sellers are here. So think Pac-Man, Ben. If the sellers are here and I'm going higher, I have resting liquidity here at a target 2 times IB. And if I'm clear this, I can just keep going. I don't know. It's just, so what do I know? Buyers were here and the buyers are here. Now, one of the things that can happen here is if you have buyers there and there, there's going to be stops, tight stops behind. So the question becomes, if the buyers are here, we can come down here, take stops out, and then rotate back up. Just an example of behavior. If I can get above this, now I have a sweep. We have to pay attention here. Let's watch. This is an important event right here. So let's watch. This often at outside edges suggests at least a counter rotation. Now this is now watch. Let's watch this together. Let's watch this. This should be like right there. So I'm not going to get too nutty about this here. So this is micro high volume right here. This is a structure to observe. Now I'm going down. This is the thing about Bookmap. I can open this up and I can concentrate and focus on the nuance. I can get these are microstructures. Sweep is suggesting potential for counter rotation. And my micro high volume is here. This is like a volume point of control or retail price in this. I think of these like stores. So Right here's my sweep, and this could be set up a counter rotation. It's not a short. Anyone who's shorting this um, does not understand trading. That's all I can say. And if you're thinking that this it can't go higher, you really should use the link in the bottom of YouTube and visit the Trader Lab, because there's such a thing called the auction. The market is an auction. And the idea of the market is to figure out what's too high, what's too low. We know what we found on Friday was too low. Now we're searching for too high. At some point, it'll shut off the buying because we'll run out of buyers. They're going to go, this is kind of expensive. And don't forget, we have our sweep, we have our micro high volume right here. So there's your counter rotation setting up. So now, what do you do about this? You see? So if you have an order flow tool, you could be using this right here. This is now resistance. Why? Sellers are there. And what's happening here? I got my buyers. So where's the last place? The high volume is here. So I know if I get under here, then the chances to start coming outside. So we'll see what it does. But remember the sweep. That was the first, as they say, canary in the coal mine. So if you're seeing the buyers and we're not making progress, those are sellers. The buyers were here. I'm under them. This is now resistance right there in the microstructure. So this is in micro resistance. Now it's not a short. It's up to you. Me, not so much. But it is telling me important information in the order flow that this is now resistance. If I can't get above here, then I can roll down and start taking the stops out of the retail traders that are trailing. So we'll see what it does. Hope that makes some sense. This is how you can use a high tier tool like Bookmap. And there's no way to know what the market will do. So we're not in the prediction business, right? So no way to know. So guys, if you're visiting on YouTube, this is not a business of predicting. This is a business of alignment. Yes, CVD is on the bottom. Mini trader, how do I know what the sell is? Sell to close or sell to open? These are stops. The delta, we don't see. Well, all we see is the aggressor. These guys, oh, do you think they're buy stops like they want to get long? I don't think so. Maybe, but I'm going to say, I think it's more of these guys who are selling the high. Why would you have hundreds going off? Now here's stop divergence. That is stop divergence. That is also potentially exhaustive. Let's watch this behavior. There's more to this. You've got 300 coming out. Oh, that hurts. And then 9. Higher price, less. This is divergence. So I have a sweep. I have my structure. I have my seller in control. I have my divergence. I always talk about stop divergence. It's not a short. I still got my liquidity supporting the market here. These are algorithmic though, but that's neither here nor there. It doesn't matter. The structure supersedes this. This is algo. The resting liquidity is material. And this was our target, right? 2 times. After this, we got to get our helmet on because we have nothing up here. I mean, you can project measured moves, but this is where the last long would be over for me. If I'd taken that long, wherever it was out here, wasn't it? Wasn't this the reversion trade? I think it was. I can't remember. You guys can help me with that. No, it wasn't there. It was somewhere. I don't remember where it was. I think it was here. So this is Trader Lab. This is trading, and I'm sticking to it. What happens, happens. Remember the saying is what happens in Vegas stays in Vegas. Well, what happens, happens. And yes, this is gaming. So not gambling unless you're a gambler. And remember, casinos pay the gamblers. We take stops. Is there really a difference? Every business has overhead and cost of production. My first short took a stop. Well, okay. Was that my plan? Yeah. Then what? Well, if that trade failed for a very important reason, we couldn't take out the opening swing low and get to the high probability targets below, then it's turn the barge around and get long. That's it. And since then, I haven't had a short, and it doesn't mean there won't be shorts later in the day, but that's not my job right now. My job is only longs, and I would have no more trades at this point unless something very special happens. This is suggesting to me here that we're running out of buyers. Doesn't mean it's the high of the day, but I have a combination of elements. I have a sweep. I have my icebergs who are absorbing. I had these guys up here who are picking the high of the day. I have no clue why they even would think about it, but they apparently don't know how to trade, or at least how to sustain themselves in the business. They will go out of business if they're doing it. But now I have divergence in the stops. I have absorption. I have micro high volume, and I have potential for counter rotation. Now, I don't know it'll do that. As I say, potential. I would never short this. I just have trade management. Then it takes me out or whatever it does, and I follow my plan. That's it. Okay, you got further questions? Sweet Heat and 54. Glad you closed your short. Yeah, there are no shorts in this condition. By the way, if you're visiting in YouTube, please give a like, support the channel. It encourages me to create more content for you. We're still going up, so I think I would say I'll do that. Not a recommendation. You can do whatever you want to do. By the way, I want to show you guys something that you may or may not be aware of. This. In Trader Lab, lots of times, it's an easy quote to forget your setups and what the rules are for them, right? Well, you can actually put the elements into a setup checklist. And then when you're coming, let's say, to mean reversion, you can have the rules right here. And then you can weight what's the most important thing. And if you get a score over a certain percentage, and all this is explained in the knowledge base, then you have a qualified trade. When we're in the middle of it, we might get myopic. So in Trader Lab, since we're not chasing the market around, we know where our trades are. We can lay all of this out. The rules of the trade, the structure that's required, the parameters that must be met, the range that you need to the obstacle to get risk neutral, whatever it is, how you trade, everything can be right in here for each specific trade. The IB continuation trade, the IBF trade, the mean reversion trades, the opening swing trades, the VPOC migration trades, the 60 PDFs I've shared of structured trades. You can pull them apart, reverse engineer them, and you can put them in here. Also, besides this, you also can use trading statistics, wherever that is. So this, you can actually export your trading, and you can set this up any way you want. So you have your stats. You can upload them to a web journal. You can keep a journal. There's loads of tools in Bookmap. And if you're not using them, why not? All the tools are here. Now, you can drill, as deep as you want with this stuff, but it's all in Bookmap. And if you're not aware of these things, you should definitely go to the knowledge base. And don't forget, Bruce, our lead educator, has a pilot program which to help you extract an edge and to understand edge and some of the tools you can use in Bookmap in order to do that. Also, there's the Bookmap Academy. And I have to remind all of you, Bookmap Academy has a special series this week. It's exclusive in the Bookmap Discord server, and it's going to be their coaches. It's going to be one every day of the week, and possibly Bruce will be doing a special segment on his pilot program on Friday. But you need to go to the special events section if you want to see the scheduling for these events. And it's pretty neat that they finally coerced the Academy coaches to come out from under the rock and share some of their insight. There are a lot of opportunities for developing traders in Bookmap server. You don't have to be a Bookmap subscriber to attend many of these. There's other streamers, educators like myself with stocks, options, crypto, order flow, of course, with a high tier tool like Bookmap, algorithmic behavior, market maker behavior, and a lot more. There's so much. And the thing that I find, at least from my experience, and it's 46 years at this point, both professionally and otherwise, I only wish there was education like this available when I started. When I started, there was no education, so it didn't exist. We didn't have PCs. We didn't, you got your ruler out. I still keep it on my desk. Draw a line. Oh, there's a trend line. How exciting. And we all go down, we all walk in the same shoes, at different times. And I always tried to solve for certainty, and I did build trading systems to try to accomplish that. So I just went from indicators to tuning indicators and to building systems based on, built on top of many indicators, and then I customized and built indicators. I found oscillators to be most interesting, and I started working with oscillators when they first came out into the public space. George Lang created stochastics as an example. I shared an office with him. He had an Apple I. That's how he crunched, the numbers for stochastics. I had high tech. I had an Apple IIe. So that's what I started with. So I'm just giving you an idea. I've been at this for a while. And just like you, we all have beliefs, but my beliefs were really imagined. In other words, it was fantasy because I had nobody to tell me anything, and there were no off-floor traders. My buddies were all floor traders, so they thought I was nuts. So I thought, well, if I tune and tweak these things, I can, squeeze the risk out. So I came into the business looking to reduce risk and create certainty. Why did I do that? Well, isn't it logical? Well, our primal wiring is to avoid risk and look for certainty. So we come into the business with the things we believe. I spent 3 hours or so Saturday morning in the Trader Lab discussing beliefs and to understand why we make decisions. The decisions we make are not, at least in this business, are not based on the best practice in the business. They're based on what we believe. Now, how about this? Here's a question for all of you that are visiting or watching this stream later. What happens if the things we believe to be true have nothing to do with this business? What happens if you're trying to solve, to fulfill subliminal and primal behaviors, wiring, the things that, when theoretically, what made us the dominant species here? Well, maybe it wasn't going and looking behind the rock in case there was a saber-toothed tiger until we were, quote, sure. So we wanted confirmation. We were avoiding risk. Well, suppose that same behavior, which is always operating, under the hood, under the conscious mind. It's primal. And we make decisions based on that habit, that behavior, and that influence. It shapes our whole lives. That's why if you step in front of a bus, you don't think about it. You jump out of, hopefully, in front of the bus. That's why you don't take risk intentionally. You avoid it. So you bring that here. Well, what happens if this is Mars and you're trying to use the same laws of gravity and oxygen on Mars? What's going to happen? You're going to perish. What happens if you're in an environment right here, which is gaming, and you're going to try to bring your behavior from Earth here? You're no longer on Earth. You're no longer in a risk-adverse environment. You cannot avoid the risk. You have to understand risk, and you have to solve for randomness, not for certainty. Does that make some sense? And maybe it doesn't. Maybe you say, well, I know I can do that. I'm going to suggest, if you've been trading, you might find out that even though you have random winners, that you have no edge and you're on your way out of business in spite of the random winners. See, this is what we've all gone through. I just have to make it better. I just have to build a trading system so I can do it better, optimize it, do walk forward testing. And now the system will take all these random inputs and make some sense out of it. But let me ask you this. Is today the same as Friday? Is today the same as last Monday? Or is today unique unto itself? And is this moment in time right here unique? Or is it all the same? It is unique. It is not predictable. It is only behavioral. Why didn't the market go down here? Certainly looked like it to me, because the buyers are here and the buyers are there. When the sellers get absorbed and we break up on top and we don't come under here, and there's my buyers, what does it say? North. Now I have another sweep. What does it mean? Look at this thing go. We used to have a saying, look at that escargot. A little play on escargot. And this certainly isn't an escargot. You know how you say it's trading today at a snail's pace? No. There's your sweep. Let's watch. More buy stops. I want to know who these guys are. Hopefully, I know, I'm going to say confidently, they're not in the trader lab. They're not selling this. They may not be buying it, but they're not going to be selling it. The only selling in trader lab, I suspect, will be profit taking. Is that right, trader lab? Please give a like if you're visiting in YouTube. Use the link in the bottom of YouTube if you want to visit the Trader Lab. There's no cost for it. You won't be solicited or otherwise abused. You do need to confirm your Discord username. Keeps the spamolators out. Also, if you want to attend the Bookmap Academy, it's only in the professional trader webinars by the Bookmap Academy coaches. It's only available in Discord. Use the link in the bottom of YouTube. And if you would like to check out Bruce's pilot program, which is about extracting edge, again, use the link in the bottom of YouTube, and you do need to register for that. So thanks again, guys. Please leave a like. Thanks for visiting this, and you can review this stream as many times as you want. Every day I do a stream, and I'm here for you guys, and so is the Trader Lab community. Thanks, guys. Have a super day, and thanks for visiting the Trader Lab.